Index funds are a type of mutual fund or exchange-traded fund (ETF) that aim to replicate the performance of a specific index such as the S&P 500 or the Dow Jones Industrial Average. Instead of being actively managed by professional investment managers who try to outperform the market, index funds simply aim to match the returns of the index they are designed to track. Here are some key features and benefits of index funds. 1. Diversification. Index funds hold a diversified portfolio of securities that represent the underlying index. This diversification helps reduce the risk associated with investing in individual stocks or bonds. 2. Low costs. Since index funds passively track an index rather than rely on active management, they have lower fees and expenses compared to actively managed funds. This cost advantage can lead to higher net returns over the long term. 3. Simplicity. Index funds are typically straightforward to understand and follow since their investment strategy is based on the constituents of a specific index. This simplicity makes them suitable for both novice and experienced investors. 4. Broad market exposure. By investing in an index fund, investors gain exposure to a broad market segment or an entire asset class, e.g. domestic stocks, international stocks, bonds, etc. This allows for easy diversification across multiple securities or sectors. 5. Consistency. Index funds aim to replicate the performance of the underlying index, which means they will generally provide investors with a consistent return pattern that closely matches the index. This approach appeals to individuals seeking long-term steady and predictable investment performance. 6. Passive approach. Index funds do not require frequent trading or active decision-making by fund managers. Instead, they follow a buy-and-hold strategy, which means the fund's holdings are adjusted periodically to match any changes in the index. 7. Historical performance. Over the long term, index funds have often outperformed many actively managed funds, primarily due to their lower costs. While they may not always beat the market, the goal of index funds is to deliver a return that closely tracks the performance of the index. It's important to note that index funds may not be suitable for investors who are seeking market-beating returns, as their objective is to match the performance of the underlying index rather than outperform it. Additionally, while index funds offer diversification, they still carry the overall risks associated with the asset class or market segment they represent.